Hi, this is Bruce Kowal. I'm here to talk about the trust fund recovery penalty. This is what happens when you owe payroll taxes and the IRS wants you to personally be liable. So, it begins with a phone call. I'll get a call, someone will say, "Hey Bruce, I was vice president of a corporation until about 6 months ago. I just got a notice from the IRS that I owe them $125,000 for unpaid employment taxes for 2021 and 2022. This isn't possible, is it? I don't have that kind of money. It'll wipe me out. Besides, I thought that as a shareholder of my corporation, my liability was limited to my investment, right? That's what we all assume from all of this. So, what's going on? Well, Grasshopper, you have stepped in it. The trust fund recovery penalty. Think of it as quicksand or, something else. So what happened? It's a common scenario. You got a failing business. The creditors, they tell you they're through with you. They now demand to be paid COD. And so you borrow those taxes that you withheld from the employees. And those taxes are actually due to the Treasury. They're considered to be held in trust. They call those trust fund taxes. So you're living on hopium, and you hope the business will pick up and you'll be able to pay the taxes. In the meantime, this diversion of pyramids, one quarter on top of the other, you keep delaying taxes, you're not paying the IRS. Eventually you go bankrupt and you shut down, but even in bankruptcy, those taxes are still owed to the IRS. And they have a tool, it's called Internal Revenue Code Section 6672. And it allows the IRS to demand payment from those people it believes responsible for the default. So what does that mean, personally responsible? Well, this code section, it lets the IRS collect the taxes from the personal assets, those are your assets, of the people who were responsible for the non-payment of the taxes. In effect, it allows the Internal Revenue Service to pierce the veil of limited liability and hold individuals secondarily or vicariously liable. This is called the Trust Fund Recovery Penalty, the TFRP. You cannot hide behind that corporation. I don't know what the lawyers tell you, but there's a special code section which overrides all state and local law, and it says if you owe those IRS those taxes, you're personally liable. That's how they make sure they get paid. So what makes someone a responsible person? That's the normal question. Well, you must be responsible and you must be willful. Okay, so who is responsible? That's someone who has the status, the duty, and the authority over all financial decision making. Okay, so what makes you willful? This is knowingly allowing other creditors to be paid while the taxes are owed to the IRS. Now here's the good news. If either responsible or willful are absent, you can escape liability. Also, if you're truly broke, you'll escape liability. So where are we? Well, this isn't the first time it's happened to people. There's a playbook. It's a lot of work. It'll take about 6 months at a minimum to get this done. So, you're going to need coaching for this. So, what do? What's in the toolkit of tax professionals like myself? Well, one thing you do is you shift the blame to others. You say, it wasn't my fault, it was the other guy. He's the one that diverted the money and paid the creditors instead of the IRS. That works. You employ legitimate delaying tactics. You're just trying to delay this thing happening to you so you can move your assets out of the way. We'll help you with that. You want to tell the IRS that you're not going to collect anything. I don't have any money. My partners don't have any money. Don't bother with this. Find someone else and write it off. You want to find out who actually did pay those taxes, if any were paid. You might bring suit for contribution by others, liable under 6672D. You want to drag other people into this mess. This is a technical thing. You'll designate payments to trust fund assessments. You may want to settle the case among the other targets. The IRS will go after 2 or 3 people not just you. It'll try and trap as many people in the fly paper as it can, and you may want to sit down and say, okay, how are we going to pay this thing? You may want to file bankruptcy. That may provide some relief. Or you may just want to pay it off. And if you pay it off, make sure you don't commingle. Don't go writing a personal check to pay this. You got to put the money into the business, or you loan the business the money. You contribute the money to capital, or you loan the money. Also, you want to protect the assets and property of your non-responsible spouse, who will not be happy if things happen to her. And you want to get your lien released, and you want to get withdrawals. So what's next? I can't help you unless you call me. So this is my phone number. This is my email address. Give me a call. And remember, there is still hope.